Okay, let's just start. Okay, a good afternoon, good evening to some of you guys and the other side of the world. I'm Kenny Simon here with you on the live geometric trading market outlook. Today is the 6th of March already, okay, 2017. So I'll just read out the risk warning or disclaimer here, and it'll just be a minute, less than that, I promise. So here you go. Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should, sorry about that, you should, where did I go for that? Therefore, Forex CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. Okay, so that's basically it for the risk warning, and we'll just get right to the chart at this moment of time. Now, before anything else, I like showing you the basics of clock angle and EMAs as usual. Just for those of you guys who have just joined us, it's always nice to be a little understanding of the current trend. Okay, so we've got two ways of looking at that. We start off with the 1 hour chart, the 4 hour, and the daily chart. So I like clustering at least 3 time frame to give you an idea of the current trend based on the charts that you see or the instruments that you're looking at. Okay, so here we've got clock angle here, very simple. You just need to zoom out, totally zoom out until you no longer can zoom out anymore, and then you would see that whole stretch of trend there, the most obvious biggest trend that you can see, and look at the angle that it's trading to. So it could easily be an angle like this one here, from here all the way up there. So you could say that it's, you know, in between 1 to 2 o'clock angle. Of course 2 is slightly lower, and then 3 is all the way here, and 4, 5, 6. So if it is steeper, let's say this whole angle here is steeper, then you've got a stronger sort of trend to the upside because it's closer to the 12 o'clock angle, like right there. Okay, so you've got 12, 1, 2, 3, 4, 5, and 6 o'clock. So 4, 5, and 6 o'clock angle, they are usually giving you the sentiments to the downside or bearishness. So here I could say easily that on the 1 hour chart that we're looking at, the DX, this is just for example purposes. So this is the Dow Jones that we're looking at. Of course, it's not a tradable one for myself, where I do not trade that, but just for practice and example purposes of trend angle, this would be educational for you guys. Okay, so here itself we're looking at it trading at that price there, and that angle is not really strong or really weak either. It's just there. So what we need to do next is looking into the other time frames, like the 4 hour and the daily. Okay, so we get a bit of an idea of what really is going on with that particular instrument that we're looking at. So here, as I go on to the 4 hour chart, let's say, you can see that that whole angle of that trend simply goes higher and steeper, and that does mark more strength for that instrument to the upside. Okay, and with that you could see that majority of candle or candlesticks, they are above all 3 lines, and the 3 lines are wide apart from each other. That's a good sign. Now the EMAs, or the exponential moving average that I use, is the 50, the 100, and the 200, and this is still giving us a lot of support. What do you call that? Structure, a structure or a trend that would give us more bullishness as opposed to bearishness here. Okay, because you've got it above all 3 lines, you've got it finding support right above the 50 moving average right there. And then as you go on to the daily chart, you would see a 12 o'clock type angle there, as you can see. Okay, right there. So that is a very good angle to look into. Okay, and that does give us more strength to the upside, even though you've got this corrective move at this moment of time. But it's really far away from all 3 lines, above all 3 lines, and even these 3 moving averages as well are pointing skywards to the upside. Okay, so this is a good chance now to get an idea that this particular instrument, in this case is the Dow Jones, trading to the upside. It's got loads of momentum to the upside. So the trend overall from 1 hour right up to the daily chart gives us a lot of idea of bullishness at this moment of time. So this is what we would like to carry, this simple technique of understanding clock angle onto the other instruments now. And this is one that I would like to share with you, is the Euro JPY. Now, according to experts, banks as well, they're doing it very largely in terms of orders from banks internally, where they are doing a lot of sell orders, even pending orders from short to medium. So we've got some reports as well to sort of confirm that they are into the sell side for the euro versus the JPY. But I'm not saying that because of that you just go on and click onto the sell button right away. It's probably not the ideal thing to do if you are risk averse or would like to measure your risk properly. So here what we would then do is start from the scratch, like what we did with Dow Jones earlier on, in zooming out and looking at that clock angle and looking at the behavior of candles as well, whether they are above all three lines. Now, whenever you've got candles, candlesticks, when they are within the three lines, like the one here, if at all we've got candles coming into the three lines and not directly above or under all three lines, then this would mark uncertainty. But at this stage, you could see that there's some bullish momentum, okay, here, because it found support. If it does find support at any one of these lines, it's a good sign. And if it does find resistance as well, it's a good sign, because then you've got that push or that pull from that resistance line, and that moving average line, and that moving average line would be a very good sort of indicator for you to understand whether or not you've got a strong push upwards, if you've got support that bounces off from either one of the three lines as a good indication of that. Okay, so here you've got that happening, and from the 1 hour chart, the Euro JPY, you've got a bit of a correction to the upside. I say correction because from the banks and experts, they are still measuring the downward sort of spiral in the Eurozone due to the upcoming elections, the possibility of Le Pen winning the elections, as I've mentioned as of last week and weeks before that. And this is one of the reasons where they've spotted uncertainty in the market, and hence they are more, investors are more leaning towards a sell sort of order, sell-off, as opposed to finding more supports and going into the buying order. So Euro JPY on a bearish note and expectations by investors as well. But here I do not see that at this moment of time. You still got that angle here on the 1 hour chart. So if we go on to the 4 hour chart, you could see that again you've got support there. So we need to be very careful and not listen to just to look or to listen to just one source. We need to combine technical and fundamental to get a bit of an idea. But at the end of the day, the summary of the method is it's best to trust yourself and what you see. Trust your eyes and trade what you see, and that's probably best to do it that way. But of course, if you've got a strategy as well, in this case we are using chart patterns, but we want to marry that up with a bit of fundamentals too. So here we are finding some support even on the 4 hour chart there. Okay, it may be creating or forming a pattern that is bearish even though it's on the way up, but it's got its limit. So this is what we want to look for. We want to look for where would that limit be, so hence the reason I like trading with pattern. So that gives me a bit of an indication of how far that could go and things like that. Okay, so we usually look into ABCD type patterns as well, but before that we want to be sort of certain of the trend, or get a clearer idea of where the trend is now. This area here, for example, on the daily chart, if we move on to the weekly chart, we could see that as you move on to longer time frame or time periods of trading, you could see that it's weighing more to the downside. So you've got more bearishness, and that does actually confirm that bearishness. Even on the monthly chart, weekly chart, okay, we could see that it's finding resistance, and it's got a bit of uncertainty as well, like the weekly chart here. But when you go on to the monthly chart, overall it's to the downside. Okay, so if you've got a long span of time giving you the idea of a downward type momentum, then it's best for you to ride that trend. But if you want to ride that trend, you would need to then look for the right time frame that fits you as the trader. So as I've mentioned many times before, choosing a time frame does actually depend, or best depend, on the equity that you have. So if you've got smaller equity under the 1,000 US dollar mark, it's best to look at the 1 hour time frame and below, so you don't get, sort of shocked by the bigger wave of corrections. And this is the idea. So if it's 5,000, within 1,000 to 5, let's say 3 to 5,000 mark, you can then look into, the 1 hour chart, neutral chart, and pay more attention to that. But if it's 10K and above, probably bigger time frames, from 4 hour to daily, and only if it's 10K and above that you could then consider the other time frame. But it's best to always stick to a good solid cluster of time frames, like the 1 hour, 4 hour in daily, or the 15 minutes, 30 minutes, 1 hour. It does also depend on whether you're a short-term style type trader who would like to day trade and close your trades within a day or things like that. Okay, so it's important for you to understand that scheme of things before deciding to trade as well. Okay, so it's got a lot to do with capitalization. The time frame has got a lot to do with the equity number, the amount of equity that you have, and also the level of risk that you intend to take. Okay, so here we've got uncertainty happening in the 15 minutes chart here. The reason why I straight away say that it's uncertainty is because you've got candlesticks moving in within the time frame, in within the 3 moving averages, and it's not above, it's not under, even though it's giving you that nice push upwards, and you've got that bullish momentum showing, you've got upward candles, but it's quite risky in terms of price action as well. Why? The reason for that is because you've got the last 2 digits of the price after the decimal place. You see you've got a price at 120.55. Now 55 itself is just too close to the 50 psychological number. Okay, so I need price to trade lower, at least a minimum of 10 pips or lower, which is 40, okay, which is 120.40, or above 50 at least by 10, which is 0.60 at least. Okay, so here you could see that price is actually trapped in between that 60 and 40. Okay, between there. It's not that 50, especially within 10 pips above or 10 pips below. It's just not gone above 60, above 50, towards 60 and above, or under 50, like under 40 and below. So here we need to wait until it goes under 40, above 60, then it will give you that momentum, whether it's an upside momentum if it's above 60, or under 40, giving you that downward momentum. So here we've got another thread. Now you've got prices going upwards, 120.56 for the Euro JPY, but you've got the thread of the 2 lines, the 2 moving averages that may act as a resistant area there, and again it may then push prices downwards. But as it pushes prices downwards or pull prices downwards, it's still not under all 3 lines. So this is very essential for you to understand that it's not time to trade, it's not decision making time when prices are not at the right price, as well as not at the right position where it should be under all 3 lines or above all 3 lines. Okay, so at this stage it's giving you uncertainty of the Euro JPY. It's only going to hurt you more or confuse you more if at all you are looking at trading in within this situation or scenario whereby candles themselves or the market themselves are uncertain. Okay, so when in doubt, you stay out until you get a clear picture of the trend. Then it would be better for you to look at the patterns that would coincide with the trend. Okay, so here we've got 1 hour chart, for example. I'll clear this one out. Now you see that support, as I've mentioned, 15 minutes chart, it's got that uncertainty, but you've got that upward momentum building up. So then you want to look at it as though you're building a house brick by brick, from small time frame upwards, to build you that story, to know whether it is picking up or it's depreciating in price. So in this case, 15 minutes towards 30 minutes, you can see that pickup in price. And then when you go on to the 1 hour chart, you still see that pickup in price. So at this stage, I'm not going to be listening to the news and the experts in just selling off the Euro JPY, even though it is said to be, good for a sell and all kind of things are going on in the market at the moment, okay, for the Euro JPY. So 1 hour chart, I still see that upward tight momentum at this moment of time, okay. But I want to share with you guys, what I see as a geometric patterns trader is this. I see a potential A to B, B to C somewhere up there, and then downwards. Okay, this is a Z-like pattern, and this is a bullish Z-like pattern, because a bullish Z-like pattern goes like that. Okay, that's your A, that's your B, that's your C, that's your D, and once it does arrive somewhere at the D zone, then you're looking at a potential upward sort of momentum. Okay, now this Z-like pattern, if we're talking about the bullish Z-like pattern, usually the shape should be, let me just erase all drawing. The shape, as you know already, you've got a Z-like pattern there. You've got A, B, C, D. AB usually equals in length to the C to D. That's how you are predicting. You're trading from C to D. So you're predicting that move downwards, and you want to know until where it would actually reach in order for you to know where the TP is. Now, the shape of the Z-like pattern usually would be, there's a move downwards like this, and then you've got a bigger move up. Okay, so I spot it this way here, Z-like pattern, potentially. There's a move down a little bit here, not over, not under that move there, but then a bigger move upwards. Okay, so that does actually meet that criteria of a potential Z-like pattern. So I need to go on in measuring now on how I would then trade this pattern, spot this pattern, draw the pattern, and then trade this pattern. So this is what we're going to do right now. So we will then pull the Fibonacci from A to B and look at whether or not that peak has actually landed somewhere, you know, potentially somewhere that it may have reversed. Now you've also got that one more line at the very top here. Okay, so the risk is it might give you a bit of a push if it found the the support there, and something fundamentally may be able to push prices upwards until there and then come down. So this is quite risky at this moment of time, unless it, even if it has found that correction there and on the way down from C to D, it is still a possibility. Okay, but let's just say that, okay, it's found that area up there, but in my opinion, if that is going into these three lines, it's just too early for us to decide. So we need more momentum to the upside. If it does actually push prices upward, then it would go to that area there. Okay, but let's say that it's on its way down at this moment of time. So let's just draw this Z-like pattern. A possible or probable Z-like pattern would look something like this. And let's say it has found its way to reverse at that peak there. So you've got your A to B equals C to D. Okay, so you've got AB here, CD there, okay, and then you just attach that line there, that becomes your B to C line. You are projecting prices potentially to fall, depreciate, and fall and come to the D point at this area. So you can draw your horizontal line right there. So that horizontal line marks a potential TP area or exit zone. Okay, so that's 119.55. Okay, so that AB equals CD. Usually, if it does come downwards, it'll come down in the shape or the form of an ABCD type pattern as well. Okay, something like that. Then you can have your A to B equals C to D, and still project and predict price that we're using that ABCD pattern there. Okay, so now let's pay attention to the C and D. Okay, so you are looking at the potential of prices falling, and you're trading from C to D. Okay, at this stage. So this is what I would like to lay out to you and look at this stage. What could happen potentially is prices moving up to find that correction move in order for it to make a nice ABCD. Okay, so I think this is what's going on at this moment of time. There may be something in the news, or something may actually push prices upwards first as a corrective move before it falls further down. Okay, and usually that downward move, if you use Fibonacci, it would project to 50% of the B to C move. So you can pull your Fibonacci from B okay, all the way to C, like that. And you're looking at your 50% right there. So you've got a second option or a second choice of a TP area or level, and that these two levels, one is AB equals CD, the other one is 50% Fibonacci retracement ratio of B to C, then you would get a zone. So this zone here is roughly where prices could reverse. Okay, prices could reverse there, right, at this zone. Okay, so prices coming downwards and then reverse and reverse upwards. Okay, so that's the move there. We can still see that it's got some move to the downside. So at this stage, yes, it may mirror with the trend that most experts and banks are talking about, the sell of the Euro JPY, mainly because the Eurozone, when it's actually in sort of political, economical turmoil, the interest of investors would still be on the Japanese yen as a safe haven. Okay, so that safe haven thing, interest to safe haven like the Japanese yen would then increase the value, increase Japanese yen's rate up. Okay, so that would see the Japanese yen going up, and that this is why they are looking into the potential drop of the euro versus the yen. Okay, it's mainly because yen appreciates against the euro, okay, in times of turmoil. So there you go. So you've got that going on. You've got the 50 here, 100 here, 200 here. So if it does come downwards, it'll find support again in either one of these lines, and there's a bit of a zigzag going on. But you should be able to see a clearer zigzag as an A, B, C, D coming downward. So at this moment of time, looking at the 1 hour chart, until I see that clear B to C move up and then on the way down, and only then I would be more confident in taking that sell trade. At this moment of time, perhaps it's a little bit too early from a patterns perspective for me to trade the sell at this moment of time. On top of that, we've got just too many risky areas here laid out by these three moving averages. Okay, so I hope that's clear for you guys for Euro JPY. A reason why I'm talking about this is because I've shared that Euro JPY and taken that trade myself. Not taken the trade literally on a spot market, but a pending order. So the pending basically would be later on after it comes under a certain price. But for me to be sure at that stage is for me to only trade once I see a nice clear ABCD first. So that's A, that's B. Wait till it goes up a little bit more and find a resistance, and only at that fall that I'm more confident to enter the market for a sell for the Euro JPY. Okay, so that's basically it. Now we've got Euro JPY. Now very quickly, Euro, as I've shared on the Telegram group, as of today is showing loads of volatility against the NZD and the CAD. Okay, that is for the Euro. For the JPY, it's finding most volatility against the CAD. So you want to combine these pairs as well. Now, when I find that in the top movers in Action Forex, they've changed their website as well, so it's a nicer feel, a nicer visual outline on the 10 movers. So you could see that the 10 movers are mirroring what the bank reports are also showing, showing you that these are the pairs that are paid more attention to by the investors. So you want to also participate in pairs that are paid more attention to, as opposed to the ones that nobody is looking at that time. Okay, so this is what we want. So Euro JPY, as I've mentioned, you've got that. Now the top movers, you've got four top movers that I would like you guys to pay attention to, and we can always discuss that now, to look into patterns, whether they are possible patterns, probable patterns or not. One of it, the top one that is actually moving to the negative or to the depreciative bearish side of things is the NZD versus the dollar. NZD dollar, NZD JPY, and the Euro USD. These three are actually showing lots of bearishness across at least 3 to 4 time frames from the 4-hour chart onwards. Okay, the one that shows lots of positivity to the upside on 3 time frames, a 4-hour daily and weekly, is the USD CHF. So you've got these 4 to sort of pay attention to, because investors are paying lots of attention to them. And also you want to look into what's going on fundamentally. Now today you've got most economic data or reports, they are on the medium sort of impact, but high impact tomorrow would actually be still what do you call that, impacting the CAD, the JPY, the USD as well. Okay, medium impact, sorry, on Wednesday. Tomorrow, high impact would be Australian dollar and the euro. Okay, because we're talking about interest rate decision for the Australian dollar, and then you're talking about GDP for the euro. So this one here may actually impact what is moving, what would move today as well, the AUD and the euro. So the euro USD is quite a good one to look into. The NZD USD, the NZD JPY as well, because you've got a high correlation between the New Zealand dollar and the Australian dollar. Okay, so these are just straight ideas on the type of pairs that I would pay attention to as well, and then we look at whether or not these pairs will be giving us some clear indication in terms of trend and patterns. Okay, so let's look into Euro USD as the main major first. Okay, let's just look into that very quickly. Let's look at what's going on now. As we have seen Euro JPY earlier on, we've talked a little bit more about how it's got more support than resistance. It's not showing very strong bearishness at this moment of time. Now, funny enough, we're looking at Euro USD, and then we're looking at, again, Euro is appreciating and not depreciating. So you've got an upward type momentum for the Euro at this moment of time. The 4 top movers, Sasi, yes, sure, I'll repeat them. NZD USD, there are three out of 4 are on the bearish side. NZD USD, NZD JPY, and Euro USD. These are all bearish. Okay, and then the positive one, appreciating or bullish, is USD CHF. Okay, so NZD USD, NZD JPY, Euro USD, all on the bearish side, and USD CHF on the bullish side. Okay, these are the 4 as of today. You know, within the 24-hour sort of thing, this is what's going on in terms of top movers of these pairs as well. Okay, so volatility, as I've mentioned, Euro, then you are looking at Euro NZD and Euro CAD as very volatile ones, maybe giving you not only volatility in terms of opportunity, but volatility in terms of risk as well. So you want to measure that properly. So let's look into this Euro USD 1-hour chart. Okay, and then we look into 4-hour, and we look into the daily. Now, what can we see? We see inequality. We don't see synchronicity. We don't see anything matching between 1-hour, 4-hour, and daily. When I say I don't see anything matching, what I meant by that is I don't see that in the 1-hour chart, I've got candles above 3 lines, and then the 4-hour, it should be all above 3 lines as well, and then the daily all above 3 lines. I see them giving me different pictures. One's under all 3 lines, the other one, 4-hour, for example, is in between the 3 lines. 1-hour, I see it above all 3 lines. Now, that gives me uncertainty, because all 3 time frames, they are not giving me that match in terms of trend. So what I do next is that I ignore the 1-hour, 4-hour, and daily, and I move into smaller or shorter time frame, and I see whether I can see a pattern, a match between the 3 time frames. Now I look into 5 minutes, the shortest time frame. There I could see that you've got appreciative move above the 3 lines. Okay, but the way the 3 lines move, they are moving sideways. The 3 lines, the moving averages themselves are not pointing upwards. If the candles are above all 3 lines at the same time, the 3 moving averages as well are pointing upwards, okay, then you've got a strong upward trend. At this moment of time, even though candles are up there, it's not it may not survive very long, even within the 5-minute time frame. Okay, hence the reason, as you can see, you've got that depreciative fall at this moment of time. And another thing with price action that you need to pay a lot of attention to is 1.0600. There you can see, if you omit the last the 5th digit, you make it a 4 digit after the decimal, then we are looking at prices trading at the 00 level. Okay, 1.060000 is exactly on the spot of the psychological number that is not a good place to buy or sell. Okay, you need to look at price a lot. So if we go into the 15 minutes chart, I can see a lot of uncertainty again. Okay, because we got prices above, of course, but the three lines are not clear above. You've got the prices trading at the almost very close to the 0 psychological number, and then you've got in the 30 minutes chart, you can see some appreciative move. Again, it is too early for me to know whether it could go up much more or not. Okay, so at this stage, if I look into 5 minutes, 15 minutes, and the 1 hour chart, this may be the time frame that I could be using for a short-term type trade, but I need prices to appreciate further and go above 0600, like 0610 or above the 0620 site number. Once it goes higher, only then I would be able to look into more what we call that bullishness. Now at this stage, if it does actually move higher, when you look left, you've got quite a number of very, very risky areas. Okay, now you could draw your resistance zone right here. When I say zone, I don't mean a single line, hence the reason I use the word zone, which actually means you draw at least two lines and not a single line to mark your support resistant area. Okay, so it should be an area or a zone as opposed to a single line. So here, let's say you've got resistance here, got resistance here, and I mark it by looking at the highest body. Let's say this candle here, highest body, and then we've got the highest wick. Okay, and when I've done that, look at how accurate that line is to mark other very significant resistance. You've got resistance very close there, resistance some more, and let's look left even more on a 4-hour chart and just pull that one down, and you could see resistance on the dot, some more resistance, a lot more resistance right there. As you pull, you've got some support as well. You've got longish candle piercing through that resistance zone or that support resistance zone. You've got some more resistance, and it just goes on and on and on. And you just got that line giving you lots of resistance and support, but more resistance as you can see, and you've got lots of long candles piercing through that zone as well, which is a good sign. And these are the criteria that would tell you that you have drawn that support resistance zone correctly. Okay, so here on the Euro USD, it's just not a good time to trade. Okay, it may be giving you bearish momentum, perhaps, meaning loads of resistance, but at this moment of time, it may be finding some corrective move. So if we look into that zone, the top of the zone, it's marked at 0.629. Okay, 29, not too bad, and about 9 pips above the 20 site number. So 1.0630 onwards would then give you a better flow of Euro USD to the momentum, to the upside momentum or bullish. That's the bullish zone. That's the border here. That border here is between 1.0629 and 1.0624. So if I would like to look into more bearish momentum, then what I would need to do is to look into whether or not prices are going under the 00, at least like 1.0590 or even under the 80. Only then it will be best. So it will be best for us to first wait till prices go under all three lines to give you a better downside momentum, or above this two blue lines here to go above. So as you can see, you've got a zone or a box area where prices are a little bit trapped in a range, in a sort of range whereby you need it to break out first to either side to then give you a clear direction of which side to trade it. Okay, at this stage, not just yet. So that's for the Euro USD. Okay, so some of you guys may be wondering what's going on with gold as well. So let's just look into gold very quickly. Now, gold has done very well in terms of the W-like pattern that has been shared with you a couple of weeks back. We were trading from C. Okay, I'll just mark this W-like pattern for you first. We've got the X here, we've got the A right here, we've got the B right there, we've got C here, and we were aiming at prices to go upwards from C to the D area, which could be anywhere within that blue zone. Price did actually reverse. That blue zone area, any one of these lines would mark the PRZ or the probable or the potential reversal zone, that's the PRZ area, or also the take profit area at the D point. Okay, so it is on its way down, so you could be trading from D to E, that means downwards. Okay, but we have taken profit there from C to D. This is based on daily chart. Okay, so this does actually depend on the strength of the dollar. I think I've got some questions coming through. Marius has got a question. Okay, yes, it's not a question, it's actually a good warning for me. Thanks for that, Marius. You saved the life of my laptop. That's brilliant. Okay, so I've plugged that in already. Thank you so much. Okay, good. So we are we can still get going. That's good. If not, we would have just cut off or been cut off there. Thank you for that, Marius. Okay, so we've got that now on the gold on the daily chart, and we are looking at downward type momentum. It's made that reversal to the downside. So what's going on with gold in the lower time frame? So what can we do meantime, okay, while waiting? Now it does actually depend. For those of you guys who have missed my other sessions, the way I've drawn that A to B, C to D is simply by taking that AB equals CD to project where the D could actually go to. Okay, so that has gone upwards, and the way where we have entered would be converting that ABCD pattern into a geometric pattern by just attaching your A to the D area that was projected. So that center point area was very close to where we would have entered a buy much earlier at 12.05. So 12.05 area, and we would then exit the lowest line at 12.60 area, or even 12.55 area, or 12.40 area for those who are more conservative. Okay, so 12.05 to 12.40 areas. We've got about $40 there that we have sort of gained from that move of trading ABCD pattern. Okay, for the gold. Now here, let's look into what's going on. Let's just first start off by clearing out everything that we can see here, so we get a better idea. We'll start off with the 1 hour chart, and it does, like I've mentioned, has a lot to do with the strength of the dollar and what's going on in the States. Okay, because that's how we could then negatively correlate price of gold to the dollar. Okay, so here, as we can see, there's just quite a number of resistance that you can find here. Okay, there's upward move, and then you find resistance here. This is a good sign sometimes, because most of the times, because if I were to very quickly draw a potential ABCD, this is what I'm looking at. Okay, so there may be a downward sort of momentum because it found resistance here at this zone. This zone here is your C point. Okay, so I'll clarify that again by drawing straighter lines, and you can then get the idea what I mean. So if I pull it from A all the way to B, okay, if I pull my Fibonacci from A again to B, I just would like to see where the C point have actually sort of found resistance. Now that resistance was found at the very topmost right there at 50%, okay, slightly lower at 38.2%. Okay, but the highest point would be your C area. But the good thing is that you've got quite a number of resistance right there on the dot of the line. But you can take that higher point or the 50% area as your C point. Okay, because you want always to look into the highest point right there. Okay, so it's no harm even if you take that as your C, but always look at the highest point. But then next to it, if you've got a lot of resistance, then that would be a better consideration for that to be your C point, that C zone area. Okay, so here if I just make it simple from the B to C, I just mark it right there. So you've got your A, B, C. So how far would D potentially go to? It's the same length as the A to B. So you just literally double click, move it like that. Okay, make it obvious to yourself, adjust the screen as much as you can so it's clear for you, and then you've got a nice ABCD potential pattern, okay, to the downside. So you're looking at a potential drop of gold, but in terms of price, but here we're looking at 1209, let's say, is the potential D type move downwards, but it's not a potential trading area as yet. Why? Because we need to convert that ABCD pattern into a geometric pattern simply by attaching your A point right there all the way to D point right there. Okay, and once you've done that, and the best that you can, you don't need to be totally accurate, but the best you can do that way, and find that center point that I call the centroid. And that centroid is your trading area, just to mark where would be an ideal trading area be under that zone. Why? Because you're aiming downwards. Okay, so downwards mean under the centroid zone, so under that line. So you need prices to first come under, find that resistance, so that you don't get into the risk of it shooting upwards. Okay, if it does as well, then your center point price would not be triggered if at all you've done that center point as your entry price by pending order. Okay, so I usually do it by pending order, so I wait until prices go under 1230. Under 1230. Okay, for those who would like it to be under 20, maybe a bit more conservative, but 1230 and under. Okay, let's say 1225, 1228, until price show that it's under that centroid area, then you could see a potential of selling off the gold. At this moment of time, it's just not time to trade. For me especially, because it's finding that risk there bouncing off from the 50 moving average. If it does find that as a resistance, then it would be a strong resistance, because you've got some points there that it has, that prices have respected these points. So the more you have respecting and bouncing off either one of the moving average, that could be a nice C zone, and you can then have that drawn, using that to draw your ABCD pattern. Okay, so here you go. That's your 1 hour chart, and if I clear that one off, just so that you could see the big picture, that's your big picture there. Okay, that big picture on the daily chart looks like that. We're aiming it on the downside, so we're looking at that price coming under the 3 lines, and if at all it does come under the 3 lines, you've got more potential to the downside. So this does depend on how strong the dollar could actually be, and at this moment of time it is actually given more hints to the upside more than anything else. So we need to also be aware. I mean, you've got NFP coming up. Okay, Thursday is quite interesting. We've got unemployment, we've got interest rate decision for the euro, you've got monetary policy statement as well, Thursday the 9th, but then before the eve of the NFP day, that's what you have. But then on Friday itself is NFP day, but we've also got unemployment for the USD and the CAD unemployment, as well as the GBP consumer inflation sort of ratio, and all these things are marked in red as high impact on Friday. So we're looking at quite a busy week, not superly busy, but you could find lots of volatility. Okay, so hence the reason you want to pay attention to the pairs that I've actually given you today as well, the 4 pairs, okay, because they are top movers. Investors are paying a lot of attention to these pairs as well as banks. Okay, so there you go. You've got gold there as well. So usually we trade gold in response to what's going on with the currencies, okay, because gold actually don't move or down, it acts, it reacts based on currencies, especially the US dollar and the state of its economy as well as politics, okay, for the gold. All right, there you go. But you are looking at a lot of geopolitical play in the global world, because you've got countries like China and a couple of other countries, especially China, who wants to gather more and more and more gold. So when prices of gold are actually lower, it actually benefits China quite a lot, because they are wanting to gather. I think their target is about 8,000 tons. They probably have only about 5 to 6 over 1,000 tons, so they've still got a stretch of tons of gold to go until they can, gather that into their reserve, into their bank's reserve. Okay, so this will benefit them a lot, and they will still keep buying, and they are buying at this moment of time as we speak as well. So we've got that coming a lot. So there you go. You've got gold in daily chart, and I've shared with you on the shorter time frame, and that shorter time frame one is reflected that way here for gold. When you go on to the silver, you could see that it does actually mirror what's happening. Not mirror in terms of patterns like exactly, but you've got the mirror of a potential move to the downside as well, like gold. Okay, so that's it. That's for the silver. For those of you guys who are looking at the silver, there is a fall expected and reaching the area of 1712 or 1713 area at the D before it makes that appreciation upwards. Okay. All right. Let's see. Let's look into GBP JPY at this moment of time, and let's just this is quite popular amongst traders out there, I can see. And I think I've got some requests of pairs. Let's just see. Hi there, Charlene. Okay. Yes, I do. I take questions now as well. If you guys have questions, I just forgotten to say that now. And feel free, Charlene, if you got questions now, we can take a look at the pairs that you're looking at, and look into how we can share with the group of what you're looking at or trading at this moment of time. Not a problem. Okay. So what's the pair that you would like to look at, Charlene? Okay. Yes. Sure. Your question is, if you have a ABCD like on silver, would you buy at D? Okay. Let me explain that. That's a very good question. Now we take trade. I mean, with patterns, it's probably best for you to take it in stages and not plan too far ahead. Of course, you can do your pending order at D and go upwards, but the thing is that it does actually depend on the pattern itself and the strength of the trend. Okay, so here it does actually depend whether or not this ABCD pattern is successful. If it is successful, what it means is it would bounce off from very close to the D area upwards. And if it is a successful Z-like pattern, let's say, okay, that means that upward move as a patterns trader of that Z pattern, I wouldn't go crazy with the buy and just let it run. Okay, I would take it. I would take profit once it goes upwards. Yes, I would probably buy at the D, but it's more important if you look at price action and buy at the right price. Okay, buying at the right price would mean this. Let's say I have got 1712 here, and that was, let's say prices did fall and bounce upwards, okay, and it bounced up, and it wouldn't be just me entering a buy trade straight away the moment I see that bullish candle upwards. It's probably best for us to measure the risk by looking at what price would you like to enter at, and 17.12 is just far too close to the 1700 area, which is site number. The next site number upwards is the 17.20, okay, area. All right, so the 1720 is another site number. If you plan to buy, it's probably more advisable for you to buy above 20, at least by 5 or 10 pips. So you could choose to either enter your buy price or buy at 25 or 30. Okay, the reason I say that is because these psychological number usually marks reversal, potential reversal area, like this, for example, like that, let's say, or even there. Okay, what you could do as an experiment is look at where are these prices at the wick or the body, when it closes, to actually show you which psychological number it is closest to. Okay, so buying would not mean that you buy exactly at that completion of the D. It's probably best to plan your trade accordingly to the level of risk by adopting price action and psychological numbers with it. Okay, I'll demonstrate that very quickly to you, Charlene, especially because it's new to you here. So you've got, let's say, price is reversed, right? So price reversed, price went up there, reversed at 18.98. That 0.98 is really close to the 00 psychological number. Okay, so I would usually, if I were to buy from here, I would exit before it reaches that 19.00 psychological number. So I would have exited at 18.90, and that is my exit area. So that's really important for you to adopt, knowing a little bit about price action and adopting that principle of psychological number as well. Okay, so that's basically really, really important. It could save you by at least about 40 to 50% of risk, okay, for you. All right, let's see. Next question. Okay, most welcome, Charlie. Hope that's clear. All right, so this is the Z-like pattern here. So it's the same for the ABCD type pattern too. Okay, so let me just demonstrate very quickly. So let's say you have got an ABCD pattern from here. Let's say that move hasn't, this move here hasn't actually happened. Okay, and you've got a B to C. All right, and you've marked the trend and you've seen that it's got potential to the downside. So you're trading this stretch downwards, but that hasn't happened yet, let's say. So what you do is your AB equals CD right there. Okay. So in this case, you are trading an ABCD pattern. So you would only trade from C right down to D. And where would you enter? You would then convert that into a geometric pattern right there and take that center point right there. So under the center point, you would sell. Okay, let's say, for example, and that's your take profit area right there. Okay, but this is the point where we trade in stages, meaning that because it's an ABCD pattern, it does not give me that that D to E potential and tell you that okay, you can then buy once it reaches there to go up. No, because it's an ABCD pattern, it's a single leg type trade, meaning you are trading only from the C to D. Whatever happens from there on, you need to look at whether you've got another pattern that actually formed to then justify whether you would go and enter that trade or not. Okay, so that's ABCD pattern. It's usually a single trade from C to D. Okay, all right. Hope that's clear. Brilliant. Okay, good one, Charlene. Okay, so that's your goal, and perhaps you guys want to share patterns, not patterns, if you guys have got patterns to share, of course, but the pairs that you would like us to look at, so we can then share further. Any requests on patterns at all? Okay, any request on patterns on pairs? Sorry, on pairs, on instruments. Anything that we can miss? Okay, let's look into USD CHF, Sashi. Okay, that's a good one. So let's look into USD CHF. I'll just replace that one there, or look for the USD CHF right here. Okay, got it right there. Okay, brilliant. Okay, CAD JPY. Yes, we've got requests coming through. That's very good. I'll just write them down. So we have got, okay, let's look into USD CHF, okay, and then a GBP JPY, of course, yeah, Cobus, no worries, and then CAD JPY, yeah, okay. So okay, good one. Let's start with the first one, USD JPY. We're looking at it right now, and okay, in the candlestick chart. Very quickly, on the 1 hour chart, it's just giving me lots of uncertainty. You've got candles in between all three lines, okay? It is finding support there, you can see, but no candles are above all three lines or under all three lines. That's just giving you a little bit of a hint that you stay away in the 1 hour chart at the moment. Not stay away, but do not place any trade at this moment of time based on a 1 hour chart. Okay, as you go into the 4 hour chart, you've got more support. So it's building up a story telling you that 1 hour may not actually be that clear, but it's building up in price momentum to the upside, and then 1 hour, and then 4 hour, it's giving you more momentum to the upside because it's finding support at one of the moving averages. It was the, let's see, this one here, that's a 50 exponential moving average. And if we look into the price, you've got price at 1.0092. Okay, so 92.0092. As we go above, it'll hit 1.0100. Okay, and that 1.0100 marks a psychological level. Okay, so it needs to go above 1.0100 to give you more room to the upside. As we go into the daily chart, again, you've got that momentum to the upside. So as we go back to 1 hour, maybe not 1 hour because of that stuck in prices and candlesticks within all three lines, we go into the 4 hour chart and above. So 4 hour, daily, and let's say weekly is giving you some bullish momentum. So here in terms of trend, USD CHF giving you bullish momentum from the 4 hour chart onwards. As we go on to the 5 minutes chart, that's a shorter time frame, we can see that momentum building up. As you can see, long candle moving upwards, okay, bullish candle moving upwards. As you look into the 15-minute chart, you can see the participation of bulls or buyers again. Okay, on the USD CHF 15-minute chart, as you can see, it's trying to pierce through all the three lines. Maybe now challenged by the 100 moving average there, and then let's see whether it could pierce through a crossover and go above all three lines. This is what we want to give us more momentum to the upside, or a decision to actually look into buying opportunities. At this stage, it's a bit too early, but as what I can see from time frame to time frame, the momentum of the upside or buyers are actually picking up. Okay, and that is actually confirmed, not confirmed, but then giving us more hints to the upside on higher time frames. The higher time frames are telling you that you've got some room up to the weekly chart, daily, 4 hour, to give you that upward sort of momentum. Okay, so here, for example, let's say you're trading, just as you get more sure into the uptrend move and you like trading on the 4 hour chart, your equity does actually support that as well, then you are looking into A here, B here, C around here. Okay, and then a potential D to the upside. You can also take that A here, B here, C, and then D as well. But I like taking that low, biggest type move, let's say here. So if I pull all the way up there, I've got my AB leg right there, and then my B to C leg here, let's say. Okay, not that wick right there, because that is part of the candle. That's not the low. The low is here actually. Okay, so as we go like that and you double click, pull the thing all the way up there, you basically use quadrilaterals, meaning that the AB's length is equal to the CD's length right there. So we are expecting price, if at all, goes above 1.0100 and above, you're looking at a potential upward momentum move to reach that area there, 0 to 1.3, and prices are just close to 0.100. So you've got a 100 plus move to the upside potentially. Okay, GBP NZD, Chris. Okay, I'm just going to jot that down as well, so that we can take a look at that. Okay, all right, thank you for that, Chris. So here we go. So we're looking into that, and the trade area would then be marked by the centroid area once you have done that geometric pattern thing. Okay, the centroid right there. So that is the area that you would look into 1.0. You see, it's exactly 1.0110 and above. So that would be a better trade. So here it's just too early. You place your trade and all that's just too early. Above that line and above would be your trading area for the buy, and then you want to take profit under the 0 to 1.3. So 0 to 1. 0200, so it's a psychological number. So before prices reach 1.0200, so at 1.0190 would be an ideal take profit area. Okay, now here if you pull A to B and look into Fibonacci and you see that that's 50% here, then you could pull your second Fibonacci and look for 200%, which is your second way that you can project your D. So as you can see, when I pull B to C, 200% falls exactly on that line that we have initially drawn, which is from AB equals CD. So you've only got one line there, and then you want to take profit under the 1.0200 area, following the principles of psychological numbers. There we go. Okay, so that's for USD CHF. Hope that's clear for you, Sashi. But if you go on to lower time frames, I think that's what you would be interested in, looking at whether or not you've got potential buy side. Now you've spotted buy side. You have seen that you've got buying potential, candles picking up, uptrend moving on. Then you want to look at upward type momentum. So the type of ABCD that you want to be looking at in lower time frame is a potential ABCD like this. Okay, this is a bullish ABCD. A, B, C, D. You are trading from C to D. Okay, so not ABCD down like this. Okay, because you need to follow the trend. If the trend is up, you want to look for ABCD pattern like this. If trend is down, you want to look for ABCD pattern like this. Okay, just to be clear. All right, there you go. So we'll clear that off and we'll move along to the GBP JPY. Okay, so we'll go into the GBP JPY. I think we've gone over it briefly earlier on. Let's just go back to it. Let's look at what's going on now. Here itself, on the 1 hour chart, gives you the downward momentum. Okay, very easy. Now here, there may have been an ABCD to the downside that have actually happened. So let me demonstrate that to you. Okay, so here you have got let's say this hasn't happened yet. So you may have had that opportunity A, B, B, C, and then C to D. So you are projecting your D move somewhere here. All right. So how do we do that? We'll draw. First, we understand that the trend is to the downside, okay, and then we draw an ABCD to the downside. So we start off with an A to the B, like that, and we double click, we simply pull that one right there, and we would have traded the C to D leg, so we would have taken profit somewhere before it reaches there, okay. So that's where it bounced up as well, as you can see, okay, and we just put in B to C all the way up there. All right, so I've got an A, B, C, D, let's say, right? So I'm trading C to D, but way would I have entered that trade is by pulling your A to D to turn that into a geometric trade to find the centroid area right there. Okay, so here we have got that right there. Okay, so I would have traded from that point under 140.00, so 139.90 and below, okay, and traded that, adjust that into psychological numbers, and I would have taken the profit at 139.35, still all right, or 139.60 to be safe, above the 50 psychological number. So that's quite a significant move that had happened, okay. So that was about 60 odd pips, almost 70. Let's say, okay, while you adjust the psychological number, perhaps about 50 pips or so. All right, so there you go. That happened already, so let's clear that one up, and let's look into what may potentially happen, or what could be cooking in terms of the patterns. Okay, so let's just look into trend to the downside on 1 hour chart, 4 hour chart again to the downside, daily. It may be a little uncertain, but it has just gone past there. Now the 3 lines are moving sideways, so let's keep that D chart aside and look at 4 hours, 1 hour, 30, 15, and 5. Okay, let's look at lower time frame. Now lower time frame, 5 minutes, not good. It's in within or in the middle of 3 lines. Let's forget that. Let's look into 15 minutes chart. Has found resistance. It's got more room to the downside potentially. Okay, for the GBP JPY. Let's look into the 30 minutes. Again, it's under all 3 lines. Perhaps some more room to the downside. And then 1 hour chart. Okay, we've got it there. So 4 hour chart the same. So you've got some room to consider to the downside, okay, by GBP JPY. Let's say you have got the peak right up there. You've got a peak here, so that could be your peak for your A, all the way down to B, all the way up to C, and then you've got potential to the downside based on the 4 hour chart. As you go into the 1 hour chart, as you do it like that, you know that that have already completed on the 1 hour chart, so that's not too much of a, I mean, this is what I need to remind you guys. If I look at ABCD, I like the C point to have found resistance at least at either one of these moving average. Okay, so A to B, B to C, and C found resistance at the 200 moving average. That's a very good one, so I would like to trade that C to D downwards. Okay, if it is just hanging in the middle and not found resistance or support at the C point, then it lowers your probability and increases your risk. Okay, all right, so that's basically it. Now this is where you've got potential to the downside, perhaps at the lower time frame, but you would need to look into this one here. Let's say on the 15 minutes chart, you've got a potential ABCD to the downside. You've got a nice A here, B down here, C has met that resistance at either one of the moving average, which is a very good sign. So you can pull that one A to B right there, okay, from the high to the low, and then you pull your next one from the low to the high, and you're now projecting where D could potentially reach. Okay, so double click C to D all the way down there. On the 15-minute chart, the potential is down to the 138.99 area or 139.00 area. Okay, so you've got your A to B right there. Okay, as we increase that a little bit, you see that you've got A, B, C, D. Okay, and we're looking into the downside, so we convert that into a geometric pattern very quickly like that. Okay, and then if you are looking into the sell side of the trade, you would need to trade only under that centroid area of 139.48. Now 139.48 is again too close to the 50 area, so I would adjust that to go under 139.50 at least by 10 pips. So I would adjust that centroid area of my trading area to 139.40 instead. Okay, so that would be my ideal entry area. Okay, 139.40. There you go. So you would need to move at this point, or place your pending order at this point at 139.40, aiming at 139.10. Why? Because 138.99 is too close to 139.00, and you would need to adjust your take profit to be above by 10 pips of 139.00 to 139.10. Okay, so you don't have that much of a room, but you've got 20 plus, let's say, pips or so if we minus your spreads as well. So you've got 30 pips, let's say, slightly less than 30 pips to have that opportunity there, but not at this moment of time to sell. It's not at the right price, too close to the 50 psychological number. So that's your trading area here, 139.40, 139.10. Now, where is the stop loss, you may ask? You can easily use the method of 67% of A to B. So if you pull your A all the way to B, okay, Fibonacci ratio, and you look at your 67% right there. So you mark that 67% right there. Okay, there you go. All right, so this does actually depend on your risk appetite too. So if I pull my this one right up there, it's about 33 pips. Okay, and you got 30 pips. So you've got close to the 1-to-1 ratio, your risk to reward ratio. So A to B, pull your A to B and look for 67% would be your ideal stop loss level. You can always adjust that a little bit more as well if you want. So you can always adjust as it goes up to go to 139.70 instead if you want that to be 10 pips under the 80 psychological numbers. Okay, so you can always adjust that to 70 instead. Okay, and there we go. That's your stop loss area right there. So you have got, you'll end up having 30. So there you go. You've got 30 there, you've got 30 there, so you've got 1-to-1 risk reward ratio exactly. Okay guys, so that's it for the GBP JPY. I'll knock that one off and move on to the CAD JPY. Okay, so CAD JPY, let's look into what's going on. Let's look into CAD JPY right there. Now, very quickly on a 1-hour chart, it's showing you lots of downward momentum. As mentioned before, we've got lots of investors paying more attention to the yen as a safe haven. So pumping in their investment into the yen would actually pump up the value of yen. So that would then give other currencies more of a bearish sort of sentiment. Okay, so this one here is reflected on the 1-hour chart. You can see that CAD is to the downside. You can see that on the 4-hour chart is exactly the same, and you've got the angle of the 3 moving averages as well, giving you hints to the downside, and that angle is quite bearish. And if you do that on the daily chart, that is just not happening as clear as the other time frames. You're looking at uncertainty starting to happen at the daily chart. Let's look at the very long term ones, even in the weekly chart or the monthly chart. It's not that clear, but both on the daily chart and the weekly chart giving you a lot of uncertainty because candles are trading in between all 3 lines. So we avoid the daily and the weekly. We move on from the 4-hour and below. So 4-hour, 1-hour, and the 30 minutes is giving us some downward type room or space to trade it. Okay, but we want to look into where would actually it be clearest form of a downward type momentum. Now, as we go on to, if we go on to the 5 minutes, you can see that it found resistance. These are signs of more bearishness because it found resistance at the 200 moving average. That's an average of 200 days, and you've got loads of resistance right there. That resistance that went after it found resistance the second time, price just fell. okay, and then 1, 2, and these ones are all there. Now you've got 1, 2. Would this repeat that movement right there? Because if you see that this move here could be the smaller version of that move there, okay, so there may be an expectation of a fall as well soon to the downside. So let's just look at whether we've got a potential type pattern as well. Okay, let's just clear that one there. All right, so here you've got that, but it's clearer for an ABCD. I think it was on the 15 minutes chart right there. So you've got A, you've got all this resistance here, which is a great area to find resistance. So we can draw a zone so we get a better picture. Highest body right there, and then you've got the highest wick right there. Okay, so if I've got an A to B, which is the low here, you just simply pull all the way A to B right there, and we make that point there the highest one as your C point. Okay, so we just pull out that way. All right, so we need prices to go under this zone. Now you've got that zone, that is your resistance zone as well, so you can always color that resistance zone right here. Okay, so you've got that resistance zone. You need prices to go above that zone to give you momentum to the upside, but again, it may be challenged by this 200 moving average as well as, sorry, this 100 moving average as well as the 200 moving average. So let's wait till prices go down further. Anyway, you wouldn't be looking into anything sooner to enter your trade because the centroid would be marked differently as well. So I'll just adjust that right there. I'll redraw my line all the way there again, okay, and perhaps look into the 30 minutes and attach C to D and look for your trading area to be under that centroid area of 84.89. Okay, so 84.89 would be close to the 80 side number. So you're looking at ideally to sell based on psychological numbers itself should actually be at 84.70, which is 10 pips under 80. Okay, so that would be an area or ideal sell entry, which does not really give you much of a space. Okay, so that should then help you decide already whether or not you would want to still take that 20 plus odd pips or so, because it may not even be 20 plus odd pips, because 84.48 is very close to 50 side number. So I would then adjust that to 60. Okay, and this gives me the idea of whether I should be taking that trade or not. Of course, it's just not that worth of a 10 pips type window there. Of course, for some of you guys who would like to take smaller pips and would like to scalp it or anything like that, you would need to be trading based on good spreads as well. So that 84.70 and 84.60, that's just about 10 pips window right there. So this adjusting it based on price action as well will then help you decide if at all you follow the rules. For me, it's a total no-no. It's not really ideally my sort of type of trade, because I would prefer that centroid area to be there, and for my trading area after adjusting it as well to be close to my centroid area, and I see quite a good gap of at least about 30 pips or so that I would like to be my minimum type number of pips that I would like to take, even for a short trade. Okay, so that's basically it for the CAD-JPY. Okay, as you can see, it's not that clear on different time frame on the downward momentum as yet. You need prices to marinate further to the downside, and only then give you more power and confidence to actually know that that trend is definitely quite solid to the downside. At this stage, it's probably a little bit too early. We've still got prices playing in that zone. Okay, that's for your CAD-JPY. Okay, I hope that's clear for you. And we then would move back to, not move back, but go on to GBP NZD. Okay, so that's another very interesting one. So we've got GBP NZD. There you go. So let's just drag that. Sorry about that. Okay, for some reason I find it a bit of a challenge to look through it. GBP AUD is right there, and then we have got GBP JPY right up there, GBP CHF, GBP JPY, GBP JPY, GBP CHF. Perhaps we could go on to GBP AUD, since I'm not able to find that right there. It's not on this particular trading platform. GBP AUD, GBP CAD. All right. Okay, that's all right. Let's just go on to GBP AUD and look into whether we've got that. There is a bit of a correlation between the two, but it's most important if we could look into the trend. Trend does actually marry that a little bit. So is that GBP AUD? GBP NZD may not be in this choice of. Let me just do that once again. Okay, give me a second. Show all. GBP CHF, GBP AUD. No, I'm afraid I don't actually have that here on Blackwell Traders platform at this moment of time. So okay, in that case, let's just look into GBP AUD, if you don't mind, because it's got some connection. I mean, strong correlation between the two pairs anyway, between Australian dollar and GBP NZD. I've got GBP AUD right here, just to make sure. Okay, let's try that. Sorry about that for that inconvenience, but let's look into this one here very quickly. We have got the that correlation, okay, between the two pairs. They're positively correlated, so you should be able to see that mirror between the two. Okay, GBP NZD, GBP AUD. So GBP AUD, let's look into what's going on. We do have the downward sort of momentum on the 1 hour chart in terms of trend. The same goes for the 4 hour chart. As you can see, a lot of resistance right here. Okay, you've got that resistance showed again, repetitively there. And then you go on to the daily chart, you could see the same thing. Now, on the daily chart, I could see a sort of clear like ABCD that potentially could happen. So that may actually happen for you as well on the GBP NZD too. So as we find that ABCD, ABBC, then we look into the potential there. Okay, so we'll just draw that like that. Okay. We're looking at a potential downward move there towards 1.5577. Now 77 very close to 80, so the take profit area to the downside would be 155.90 instead. That's above 10 pips above the 80 area, so 55.90. Okay, so then you've got it there, so that's quite okay. It didn't move about too much. So once we go into there and pull your Fibonacci. Now this is something that you can do on your GBP NZD as well. Perhaps you want to look into the daily chart as you're looking at this and see whether or not you've got the chance of looking at this similar type pattern. Okay, and look into the C area, whether or not it has found resistance right there. So you've got your A, your B, your C, and your trading area would be marked there, and that would be at 1.6395. Now 95 to the downside would be 80, so 80, 10 pips down would be 70. Okay, so it's 6370 instead. So what we do is the 6370 area would be your trading area. Okay, would be your area that you could potentially enter. So your 63, let's just look at that, 6370. Okay, so got that area there. There you go. So you've got it there. Now this is where I meant earlier on by prices still having that nice gap for you. Okay, so prices have definitely gone under that area. So now you're looking at price at 61.34. So what I would do is to look close to that price right now. For example, you could do that the same for your GBP NZD as well, and do that adjustment. okay, in terms of your price that you see on GBP and ZD. So I'm looking at price now. It's gone under the centroid, and I would like to know whether I can still trade. So the answer to that is yes, because it's gone under the centroid, and it's just building momentum to the downside, which is good. So I'm looking at price at 1.61613, right? So double three to the downside closest to 20. So 20 minus 10 is 10. So 6110 would be my ideal area of entry. So in that case, I need to wait for prices to reach 6110 for me to enter a sell type order in order for me to look into 55.90 as my take profit zone. Okay, so 6110. All right, so 6110. There you go. So yes, it's quite close. Not just yet, but quite close, let's say. So you should be able to look at that on the GBP and ZD. I do apologize for that. I will be speaking to the treasury room at this moment of time and look at whether or not that could be added onto our chart, onto the charts, or as one of the instruments to trade with as well. Okay, for the GBP and ZD on this platform. Okay, so I think I've not made a mistake by not able to find it there. I think we don't actually have it there catered. We do have GBP Singapore dollar, but not GBP NZD. Okay, correct me if I'm wrong. I don't think I can find it still. Okay, so there you go. Not there at this moment in time, but that's basically it. So I hope that could actually mirror what you could see on GBP and ZD as well. So I think I've covered quite a few. We've covered USD CHF, GBP JPY, CAD JPY, and GBP NZD upon request. So let's see. We have GBP NZD. I'm not able to see it, so no, GBP NZD we do. GBP, is it not GBP NZD? GBP NZD, I am not able to see it on my chart here. Perhaps we have it on your, depends on the account type that I've actually registered on as well. I am not able to find it here. I've got GBP AUD right here. Right click that and show all, and still not able to find it. Let's do one more thing. New chart. There you go. Should have done this earlier on, I guess. GBP JPY, NZD, JPY. Perhaps with the account type that you have, you should be able to see it right there. Yeah, I'm sorry, I don't think I could see it on this on my platform. Perhaps I need to change the account type that I have here, because it was just for educational purposes. So I thought of having the major ones that we have, or the one that's requested most often, but we don't actually have that one here. We have it in Blackwell Trader, but on this particular account type, perhaps I just am not able to find it right there. Okay, so under Group 5, you've got GBP. It's GBP NZD that we are looking for, yeah? So nope. This is no sign of it, unless I've just gone totally blind. Let's just see. Nope, I don't think I have it right there. Let's just do one more time right there. Aha, okay. Let's see. Any more extras? GBP again. Now, there you go. All right, at last. I just need to scroll down that. So let's do that again. Now we've got it. I'm not sure why I was not able to see it on that table even after clicking on show all. Let's see. Okay, we've got it right now. There you go. So let's look into GBP NZD. So yeah, we've got that now, and let's quickly insert the moving averages as well. For those of you guys who are new, I'll just repeat the whole step. Okay. Moving average 100. There you go. Okay, and indicators again. Trend moving averages 200. Okay, there you go. Now we've got it back on track. We've got the GBP NZD again. So we've gone on to GBP AUD 3. We've gone on to it. So you've got an idea now GBP AUD as well, for those of you who have traded. Now 1 hour chart gives us a very nice support. Okay, a very nice support in GBP NZD. Now on the 1 hour chart, the reason I say that is because you have got that very nice support right on the dot of that 50 moving average. Okay, and let's look at the price. Price is 74.86. Okay, you need prices to go above the 80 at least by 10 pips. So as it moves towards 90 and above at 75.00 and above, then you've got more upward momentum for the GBP NZD. Okay, it's got a very nice area right there, but let's look into trend first, and let's just confirm trend wise. And we've got very strong upward momentum to the upside based on 4 hour chart. The same goes for the daily chart. The daily chart has got a bit of a challenge whereby you've got that three moving averages. They're not really at a nice angle upwards. Okay, so let's focus on smaller or shorter time frame. We have got that happening. As you can see, you've got resistance, got past resistance already. You've got that very nice support right there. Okay, and as we go into the 15 minutes chart, got some more support as well. So let's look into what we can see here. Now we have got, now at a glance, the way I look at it is a positive or a potential ABCD type pattern of a Z-like pattern. Okay, so as I pull my A to B here, I can see that it landed around there. Okay, now it may have found a bit of a how do you call that, a correction right there. So if I pull this A to B and make that AB to CD right there, it's telling me that it could fall that much, but it's an A, B, C, and D downwards. Okay, so that down is perhaps too big of a fall. Okay, this may be a bullish type ABCD pattern. So what that means is that first we look into a potential ABCD somewhere here. First, we need prices to come down a little bit more to confirm that ABCD move. Okay, so as we take that away, this fall usually is about 50% of this long move. So if we go on and look into that, then you're looking at this potential here as a potential fall of the ABCD pattern. Okay, and once it does reach, let's ignore the lower one. That is a zone that it could potentially reach to and then find that support, because this is a potential Z-like pattern that looks like this. Okay, down. Of course, that down from C to D usually moves like this, like an ABCD pattern downwards, and only once it find that support there that it would actually find find support, and only then it would appreciate to the upside. So that's your GBP versus the NZD. Here you would need to look into whether or not you've got more uncertainty, geopolitical or political uncertainty, or even economic uncertainty in NZD to find that support, as well as what would actually happen with the Brexit scenario as well here with regards to the GBP. Okay, so here we are only looking at the perspective of a 15 minutes chart. So we want to then look into potential, but it's being pushed very strongly by various support zone, and that was the strongest support zone that has been found to have bounced off from the 200 moving average. So that might give it some push to the upside. Okay, and it is already doing so, and it's got more push to the upside from the 50 moving average as well. Okay, and it's finding more support. So this may actually be a potential ABCD type pattern, but the only thing is you could find that A here, B here, C to the upside as well. So if I look into A from here all the way here, then I can see that potential of more move to the upside before it sort of get a nice Z-like pattern for me. Now, if at all I expect that to be up there, then I would look at where would that level be based on Fibonacci. I could see that it's really close to the to the 1.1618 area. So that's a good zone there. So from the look of it, of how things are progressing, if at all the GBP is strengthening, then you're looking at more room to the upside. You can always use the short-term ABCD as we have drawn there as your indication. So within a big pattern, you may be looking at that potential like right there. Okay, I say ABCD. And once it does actually do that, then you may then look into that stretch of B2C of that Z-like pattern downwards to the 50% before it finds a support and go up. Okay, so that's just based on the 15-minute chart, and the way I look at it, it's got more room to the upside, and you would need to just match up with other time frames and look into fundamental aspects of things to actually support that claim to go upwards. But again, it's probably best, for me to look into price action. I would look into 1.7500 and above, and once prices does actually go above like 7510 or 7530, then you've got more room to the upside, and you can then aim it at this area here under 75.50, like 75.40 or something like that, as your ideal take profit area before you take the second round of trade to the downside later on. So for now, yes, some room to the upside before it meets the ideal or potential resistant area to come downward. So you've got that upward move potential buy, downward move potential sell, and then the third one, an upward move once it reached the D point, which is here. Okay, now it's on its way to the C area. Okay, guys, so I hope that's clear. Sorry about the inconvenience of not able to find the GBP and ZD, but we've got it now. So yeah, it's probably the best way to look into scrolling down from the file area here. So it just didn't really appear on the table, which I'm not sure why. Okay. So that's basically it, guys. Hope it's been clear and enjoyable for you guys. Trade ideas, basically, and hope you guys actually wish you guys happy pipping, and hope you guys bag some pips for the whole week, because we've got quite a fairly volatile week. A lot of things to expect, especially from Thursday onwards. But on Wednesday itself, with the ADP and everything else, I guess we will see a volatility and volume pickup for various pairs, okay, including gold as well. So any other questions, guys? Any more pairs to actually share with the rest? So anything that you guys are looking at? If not, then we shall then meet again on Thursday. Okay, so when you guys have actually registered just the ones, it will be sufficient for all the 8 webinars for this month, including today, or the next the next 7 webinars for the whole month of March. Okay, all right. If you guys have got no more questions I see coming through, so I shall then say thank you, and we shall then meet again. Any questions, guys? I'll just give it another minute or so, just in case some of you guys are a little shy to come forward with some questions. Okay, all right, Marina, good to see you. Yes, so I think we've covered most of it. Most welcome, Marina. Okay, so thank you very much, and we shall meet again on Thursday. Pass the word around to join me live on Thursday. We shall look into more pairs that I can share with you guys as well from reports by the banks, which usually comes out on Monday the most, and I'll have the time to gather them up for Thursday's webinar. Okay, now have a very good evening, guys, and thank you, and see you on Thursday. Bye-bye for now.